Well, last week was a mixed week. We had tech stocks actually end up in positive territory, which was nice. The other indices were down. So again, just kind of mixed results, but not bad overall. We'll get into the numbers here. This is your market in minutes report. Of course, we're looking back on December 9th through the 13th last week. I'm Mike Minter, Chief Investment Officer. And I do apologize for being lax on the videos lately and not getting as many out. I had some surgery to deal with, some nerve issues in my left arm, and that's all taken care of now. I'm going to kind of be rehabbing that for a while, but all is good. So trying to get back to normal. We will be hitting the videos again in full force in January. So again, thanks for sticking with me on that. And let's take a look at the numbers here. So this was your 5-day performance. Again, tech was up, nice little bright spot there. Rest of the indices down, but not to worry, as year-to-date performance is just unbelievably good. These numbers, you just don't see this very often. I mean, obviously foreign stocks down here at the bottom were relatively average year, but for the US markets, it just doesn't really get much better than this. This has been phenomenal. And a lot of concerns about next year, after, two stellar years, 23 and 24, some concerns that, man, isn't it time for a pullback and should we be concerned? And the answer is nobody knows, of course, how next year is going to play out. But the reality is in bull markets like this, you tend to get pretty tight clusters of very strong returns. In fact, I think the average in those bull markets of the last 40, 50 years has been about 23%. So it's not out of the realm of possibility that you have another great year. It wouldn't be crazy. But it also doesn't mean that even if it's not as good, that it's necessarily negative. So again, no cause for real concern. Everything is still pointing in the right direction. Economy is still strong and seem to be on pace for additional rate cuts, although, there's a little debate there. So, I don't see anything on the horizon to be super concerned about. But just to kind of ease those fears, it's not out of the realm of possibility that we see another decent year there. So no guarantees on anything, of course. That's the market. Rates. So the rates have continued to kind of confound and confuse. We had the rate cuts and rates have kind of gone up from that point. But again, a lot of that had already been priced in, and now that we're in it and we've had some kind of mixed data coming in, rates haven't really gone to the negative, or not negative, but have not declined as expected. But when you take a look at the broader picture, there's some factors kind of propping those up. So just across the board, we haven't seen any dramatic changes over the last few weeks, but you got your 30-year at 4.62, 10 years at 4.41, and the 2 years at 4.26. Mortgage rates have remained stubbornly kind of above that 7%. I know that's discouraging for home buyers, especially first-time home buyers. I get it. Not exactly where you want to be considering where we were a few years ago, but hang in there. Hopefully those will come down for you. So as I said, up and down week. So, some indices down, and tech was up, obviously. But stocks fell broadly over the first part of the week. So we had some leading chip makers who produce semiconductors for AI were under pressure after Chinese regulators announced an anti-monopoly investigation. And investors did breathe a sigh of relief on Wednesday. So that was following news that consumer inflation in November was in line with expectations. Mega cap stocks led the rally. The Nasdaq closing above 20,000 for the first time. Meanwhile, the Dow did fall as healthcare stocks came under pressure. Stocks remained in the trading range for the rest of the week on mild concerns about Thursday's warmer than expected wholesale inflation report and a spending slowdown among lower income consumers. But the Dow did register its worst losing streak since 2020. Let's take a look at next slide. So final Fed meeting. So this final Fed meeting of 2024 is coming up. So the consumer price index ticked up to 2.7% on an annualized basis in November. But this was as expected. And so the markets rally following the news reflected investor relief that inflation met expectations and that the increase from the prior month was very slight. So those two factors may reinforce the belief that the Fed would follow through with the December rate adjustment. We shall see, which it penciled in back in September. So there have been some developments and some kind of grumblings that maybe they pause the rate cuts. We shall see. It's anybody's guess at this point. But the bellwether inflation measure was the last critical data point before the Fed's two-day meeting scheduled to end on December 18th. Of course, that is this week. So we'll be watching that very intently, as will the rest of the market, believe me. So that'll be an interesting one. What's on deck for this week? So key economic data. Tuesday, FOMC meeting begins. Again, that's the Fed, and we'll hear from Powell, I'm assuming. Retail sales, industrial production, and business inventories. Wednesday is housing starts and permits, FOMC announcement, and that's the Fed chair press conference. So that'll be the big one. Thursday, GDP, existing home sales, and weekly jobless claims. It's a lot of data coming out this week, so it'll be a big week. Friday, personal income and outlays and consumer sentiment. And very light on companies reporting earnings. Of course, we'll head back into January and full earnings season, and it'll be wild and crazy. But for this week, it's pretty mild. Wednesday, we got Micron. Thursday, Nike, Cintas, and FedEx and Paychex. So not too much on the horizon there in terms of reporting earnings. And again, that's it for this week, folks. I really appreciate you tuning in, and we'll get back to videos full force in January. Hope you guys are enjoying the holiday season. This is all of our contact information should you need to get in touch with us. Hit that subscribe button down below if you would, and subscribe to our YouTube channel. We'd love to have you. And here is a little light disclosure to leave you with. But again, I really appreciate your time, and hope you guys have a great week. We'll talk to you soon. Thanks, guys.